I love tangible assets. Why it's so important to invest in tangible assets, because that's eventually what builds wealth, and that wealth would provide options and freedom through what? Recurring income, or some people call it passive income. I don't think it's truly passive. Passive income really only comes from like bank CDs or treasury bills, money market accounts, or you can buy mutual funds and ETFs, and those are relatively passive, yes. But to really orchestrate your financial future, your freedom, I found that it made a lot more sense to invest in tangibles and real estate. Outside of business, real estate was always been my go-to, and it worked really well for me. Hi, it's David here, CEO and the founder of the Freedom Founders Mastermind community. A lot of people know that I kind of made my way through the course of my early life and my current life in building recurring income through real estate investment. Yeah, I started when I was a kid, like 22 years old, before I was even starting dental school, and bought my first rental property back in 1980. Yeah, that's 43 years ago, 1980. I still see that house from time to time, and it brings back memories of what things were like back then. And I'm not going to go back through all the economics, but I will tell you it's a time coming out of the 70s where there was a lot of inflation, stagflation. The interest rates were taken to a very high level to beat back inflation, and we're in that same era today. That house provided me the impetus, provided me the foundation for understanding why it's so important to, outside of investing in yourself, which I was certainly doing, education, right, to be trained to go into a business, a practice, a profession, which is how we make our living to begin with, but how important it was to learn how to invest also in assets. And I love tangible assets versus financial products. I love tangible assets. Why it's so important to invest in tangible assets, because that's eventually what builds wealth, and that wealth would provide options and freedom through what? Recurring income, or some people call it passive income. I don't think it's truly passive. Passive income really only comes from like bank CDs or treasury bills, money market accounts. Those are truly passive. Or you can buy mutual funds and ETFs, and those are relatively passive, yes. But to really orchestrate your financial future, your freedom, I found that it made a lot more sense to invest in tangibles and real estate. Outside of business, real estate was always been my go-to. And it worked really, really well for me. And it continues to work well for the hundreds of high-income business owners and professional practice owners that we help today through the Freedom Founders community, which is something I got into organically and created just through not a need or a necessity, not something I had on a vision board, but just because I created the freedom in my own life to go on to a next thing, which Freedom Founders became it. Over time, over many iterations, not going to go into that story today, but it goes back to my basis, my premise of the way to get to your first level of freedom, to take the pressure off, to allow you to have margin, to be more creative and evolve in your own life, in your pursuits, the way you do trade time for dollars, to give back, to serve people. The only way to do that on your own terms is to have a safety net. And for me, that was having that recurring, quote, passive income that was created over a number of years of my investing in real estate. That's what I want to focus on today a little bit, because there's a lot of, I think, a lot of propaganda and misinformation given today about real estate investing, really investing overall, because where we are in the market cycle. The last 14 years coming out of the great financial crisis of the 2008, 9, 10 era, it's been a big upswing in the markets overall, in the financial markets, Main Street markets, crypto, everything has overall had a very, very strong rise. And we're still seeing that today in a big way. There's different sectors of the marketplace that are showing the initial headwinds of what I think will be an overall downturn and correction in time. But my point is that the times that we're dealing with right now, there's a lot of hype. There's a lot of hype about, well, if you just invest in this, and that could be stock market, it could be tech, it could be NVIDIA, it could be Tesla, it could be crypto, it could be NFTs, which they're a little bit outmoded right now. That fad has kind of gone its course. And certainly real estate. And I still see a ton of people who are promoting real estate based on a model that, yes, has worked well for reasons a lot of people don't understand. A lot of people think that it's their genius that has allowed them to create mini empires for themselves, maybe for other people, through syndications and real estate funds. too many people still believe that model is sustainable like forever, like what I call the greater fool theory. There's always going to be somebody else to buy. I'm not going to go into depth into the model that's happening today, but my caution to every one of you who's watching this video is, if you're thinking about jumping into, quote, real estate, to be very, very careful. In fact, I was on a forum today, just briefly. A dentist was asking, hey, I want to get started in real estate, so like, where do I start? And my comment back to that person was, love your enthusiasm. I want to see that person continue on that course of investigating and being curious about ways to create wealth and tangible cash flow that would support them outside of their practice endeavors. But I told that person, I said, love your enthusiasm, but this is not the right time, at least to jump into equities. That is ownership. And that's the way most people get started. Buy the rental properties, do the short-term rentals, which has been the big fad of the last several years. Eventually, then you want to get into like syndications, right? And into funds. And it's been this big ride up for the last 14 years, particularly the last 3 years. But the taper is here. The people need to pivot and understand, without pivoting, the models that have taken people to where they are today will not carry them forward. And that's what most people don't understand. Even people who've been through a previous cycle, their memory seems to lapse. And so I look at this often. So how did I do it? I started with single family houses. I'm still a proponent of single family houses, but maybe not so much right now. Not because single family houses aren't a rock solid model from which to start for the right people at the right time, but we're in a topping of the cycle where both the pricing of the equity values of real estate overall, but particularly housing, is way at the peak. And along with that, we also have interest rates at the peak. The two combined make a lot of the benefits of investing in single family real estate, or really any real estate that's leveraged overall, probably not a good time right now. But again, people that don't know the difference, have not seen a different market cycle, they only know what they know. And they're going to keep pushing that and selling programs and selling syndications and selling investors on this model that keeps going. So I told you I started buying real estate when the market was similar in many respects to what we have today. High interest rates, going through a market correction recession, really back to back, 1980 and 81. Yet there I am as a kid, getting my dad to put money into a house that we bought, and we did some things right, and that's the key thing. Did some things right. This house, location-wise, bought it, where housing prices had come down some, even though interest rates were high. That's what brought housing prices down. I learned to manage the property. I learned a lot. In fact, I learned a lot of skill sets. That's one of the things I want to bring to you, is why I believe that real estate was so beneficial to me. It wasn't that I hit home runs. It wasn't that I hit some big upswing in the marketplace where I had these massive profits like we've had the last 3 years. That didn't happen at all. Mine was a disciplined process of investing in myself and in these assets, which I was really self-managing. And that's where the passive goes out the door. A lot of people don't get that. They talk about passive, you just hire a manager. No, it's not that easy at all. What real estate really did for me was create a disciplined process of investing my capital, the discretionary income that I had out of my dental practice, into tangible assets. That discipline of buying properties, learning to negotiate. So here's where the skill sets come in. So learning to negotiate, learning about financing, learning about management, learning about tenants, people, contractors, business law, legal aspects. I mean, these were skill sets that I did not learn in my formal education. These are skill sets in dealing with single family properties and learning how to finance them, how to manage them, how to add the value. These are things that I put a lot of time and effort into. So again, there's an investment of my time and effort. But these skill sets grew with me over the years to allow me to do more things in my dental practice and learn how to exit dental practices on my own behalf and help other people, but certainly in real estate, the financing, and learning more about the economy. And so many aspects that these skill sets have been a big part of why I've been able to evolve just in my overall business pursuits, period. That's outside of the actual financial or monetary benefits that real estate provided. So again, number one, skill sets. Focusing on a specific investment asset class, putting my hands on it, control of it, not abdicating control to a third party, a money manager, a financial advisor who would just gladly take my money and I'll allocate it for you, David. No, I want to do it myself. Again, there's a sacrifice to do that. There's a sacrifice, but I'm investing in myself while I'm doing this, understand. And that investment, realize investing in yourself through education, through new skill sets that you learn can never be taken away from you. Can never be taken away from you as long as you're alive. Confiscated, extorted, whatever. and it's not taxed. Those skill sets are never taxed. So people are always saying, well, how can I save on taxes? Or how can I push the easy button? Look, there is no easy button. You've got to sacrifice early on, but sacrifice the right way. Understanding these skill sets and then the discipline to put money into these assets. We didn't hit some big uprise in the marketplace in Texas back in the 80s or 90s. In fact, we didn't have any big uprise since this last upturn from the great financial crisis. We didn't see inequities ever go high. We just would truck along at appreciation rates of 2, 3, maybe 4%, steady Eddie, which means I had to negotiate and manage for what? Cash flow. No big profit swings after 2 or 3 or 4 years like we've seen recently. No, cash flow. And this is what's missing in the marketplace today. Operators, syndicators, fund managers who've been selling their programs, selling their investments to, quote, passive investors, accredited investors, have been selling on the model of you don't really have to be a great manager. You don't really have to hold these properties very long. You just buy them, you put some lipstick on them, and you have a greater fool buy them in 18 or 24 months for these multiple profits, and everybody's happy. And yeah, that model has worked, but it's an anomaly. It's an anomaly, and people don't get that. It's not like I'm going to be a doom and gloomer. I'm just saying that's an anomaly. We're back to fundamentals right now, and those fundamentals are what I invested in when I was doing it back in the 80s and 90s, building my own portfolio of houses. I invested in the fundamentals, and that's all I know. I know fundamentals. I know how to manage. I know how to buy and structure terms on the capital stack because I had to do it myself. No one can take that away from me, and no one, in my opinion, can do it better than I can. Now I teach other people how to do it. I teach other people how to do the due diligence and buy and invest in the right assets based on where we're on the market cycle today, which is different. As I said, I wouldn't go back and buy single-family houses today, particularly with leverage, because they don't make sense. They will make sense again, though. This is part of the market cycle, not timing the market, just understanding the overall ride of the market. I invest in different aspects of real estate today. Don't have time to go in that today. I just want to give you these fundamentals of why real estate worked for me. The discipline of taking capital that otherwise would have gone to a 401k, because that's what everybody else does, realizing that I would have lost control of that money. No, I had full control of my money. I could move it anywhere. I don't have any constraints on it. No government rules. No lockbox till I'm 59 and a half. Nope, I kept my money. Took the tax benefits. I don't invest for tax benefits, but there's huge tax benefits in real estate. Many of you are aware. I had those, and I held my properties long term. Well, I had to. There wasn't any big profits to be had in short term like there have been in the last 3, 4 to 14 years. It was a fundamental cash flow game. So how did it help me if there wasn't any big profits? Because I took extra money from my practice and paid down the loans faster. It's called the snowball effect. Now, I'm not saying that's the right model for everybody at certain times in the marketplace. If you have a low interest rate loan and you're cash flowing something, I probably wouldn't pay that loan off early, but I was dealing with loans, interest rate loans in the upper single digits, 8, 9, 10%. Well, it made a lot of sense for me to pay those loans down more quickly than the amortization, which might have been 20, 25 years, because I took over a lot of loans, got sellers to finance for me. I didn't use the banks, and I wouldn't use the banks today. Even with interest rates being high, I wouldn't use the banks today. I never had to do that. Again, I created the skill sets to negotiate and structure that nobody else really today, until the market changes, learns how to do. And there's people that are trying to figure that out today, but they'll be late to the game because these are skill sets that I developed over many years. Having those properties that I paid down, a lot of them within 15 years. I had some 35 going on 40 properties paid down in 15 years. Now that cash flow, that quote free cash flow with no leverage at that point on many of the properties, is what gave me the option to step away from my practice when my daughter was sick. It gave me the option. It gave me the freedom. It was that milestone point. I wasn't done with life. Wasn't done with taking care of my family. Didn't even think I was going to be done with dentistry. In retrospect, I was. Not because I had to, not because I was forced at gunpoint. It's just that stepping away from the practice to be with my daughter allowed me to take some time off and develop in my mind what I was going to do next. I could have gone back to dentistry. I guess I can still go back to dentistry today. I'm still capable. I'm still healthy. I could go back and do basic dentistry. But I chose not to. And it's okay. I built optionality in my life way before a retirement date. Way before, because I left my practice in my 40s when most people would be practicing another 20 years. Well, how could I do that? Because I had enough. I had enough at that point in time to take my foot off the pedal, in fact, completely off the pedal for dentistry, sell my practice, put my money back into real estate, bide my time for a while, spend my time with my daughter, and then I got to decide, do I want to go back into dentistry, or is there something else to be more fun to do? I've always been an entrepreneur at heart. Dentistry was a great gig, a great profession. I have full respect for anybody who serves other people. It puts in the long, hard hours and the investment to become proficient in a clinical realm that takes technical expertise and patience and perseverance. I totally respect because I did it. But I also found that there was another part of my life that was probably hidden in all of that search for certainty. Search for certainty. That's what dentistry is. It's a walled garden of protection, because as long as you're willing to show up and do the work, you can make a good living. And that's fine. But I used that as a stepping stone to my real freedom, which was investing in the assets that would give me my real freedom. And today, my life has changed for the better. My daughter's life has changed for the better. Thank goodness. God's grace. And I'm living really my best life. Nothing wrong with my early life. I was a grinder like everybody else. But I found you don't have to grind all those years to get there. You just need a plan, you need a blueprint to make that happen, and most people don't have the clarity. I exchange back and forth on different threads and investment threads in different groups, and I constantly find people who I would say they're not uneducated, they're not wrong in their own thinking, their perspective, but I see so many people that are dug into dogma, indoctrinated into belief systems that were given to them by well-meaning people, their parents, teachers, maybe just stuff they read because they've got a cognitive bias towards one particular thing, and they're so reticent to look at anything else. And I don't ever try to tell people you're dumb, you're wrong. No, that's not for me to do. The teacher appears when the student's ready, right? That's what I always say. So when I talk, there's always people that actually hear my message and get it. They understand. They don't know exactly what I do, what I teach, but they do know by following me that I have a passion for what I do, that I'm very, very convicted. Not that my way is the only way, but my way does work for the right people. And I'm very careful about who I work with, because that's part of what success is choosing your clients, your patients, your customers to be the right fit. If you try to serve everybody, you serve nobody. So I'm very careful about who I work with, but the people I get to work with, the blessing I have, are people that will take action, and the successes that I get to see, the lives that are transformed, is what does it for me. That's what feeds me today. Oh yeah, no, I don't do it for free, because if I do it for free, then people wouldn't put the time and effort into what I help them do. So I assess an investment on their part in time and capital that I know is far surpassed by the returns that people get. Makes me feel good, but it's still significant for a lot of people, as it should be, because I'm transforming lives. I know how to do it. I've been there, I've done it, I've mined my own experience. This is not some hypothetical, theoretical. I've done it, and I've helped hundreds of other docs do it. But they had to be ready to step up and want to make a change. Usually as people get further down in their life career is when they start looking around going, it's not exactly what I had in mind to do this for 35 or 40 years. They want something different, and then you should want something different. When you're young, you don't know anything different. You're just out there ready to take on the world, and it's finally get to make some money, and that's all good. But after a while, the grind gets to people, and they say, where am I really going with this? What have I been doing? How am I going to really get to live the life before 65 or 70 years old? I think the ADA shows that the average dentist is now working till 69, which I think is a terrible disservice to the profession and what people should be able to do. But again, their belief system is around old traditional models of investing and capital allocations that are, well, haven't worked in the past, and they're gonna be in worse shape if they follow those plans in the future, because those old models are so outdated and so fraught with issues and problems, and you don't learn anything. I tell people, if you just put your money in a 401k or a cash balance plan, you do it for the tax mitigation. That's the big deal. You'll save on your taxes. And what I tell people is you learn nothing about orchestrating your own capital. You learn nothing about that, and that's outside of your own investment in your skill set, your trade, your profession, your business. Outside of that, understanding how to make money work for you the way you have to work for it is the other skill set that actually will take you further down the road. You can do both things in tandem to some degree. Usually you focus on your technical skills for your trade, business, or profession first, but relatively soon, you've got to start looking at the money part. And that's what I fortunately did. Not that I was clairvoyant at a young age, but I just always had this in me that, you can't do things always sequentially. You got to do something simultaneously, and it's not easy. I will tell you, it's not easy. Buying those houses and self-managing and figuring that stuff out and really dedicating myself to two causes, dentistry and real estate investment, not easy. Didn't have a child until I was 36 years old. Didn't get married until I was out of dental school. So I did have some time to devote to something that a lot of people don't have time, and that's where I come in. Today, for people who don't have the time, but still want to have the blueprint and the ability to get themselves free sooner, not later, is having a community, Freedom Founders, that has a proven track record that can take them and customize. Key is customize, not cookie cutter, customize an approach to life, not just money, not just cash flow, not ROI, but to life, and that as couples can change everything and change everything in a short time. We see people getting free optionality. Doesn't mean you have to sell your business or practice, but getting free from the doldrums and the chains that bind them up, every week, all the time, to no freedom, to stress and no peace of mind. We see them get free from that. Some in as few as 6 months. That's on the short end of the stick. A lot of them between 18 and 36 months. That's kind of midstream. The majority by 5 years. And maybe some that are younger, quite a bit younger, maybe on the outside, 7 years. I tell people in a profession like dentistry or a high-income professional, if you can't get yourself to optionality, freedom, I don't mean retirement, I just mean to have freedom and choices, to do things your way, not based on what other people tell you have to do. If you can't do that in 7 years, you're doing it all wrong. And I'm telling you, it can be done. But you have to want it. You have to be convicted. You have to have a reason why you would want to do that, because too many people get complacent. Follow the group think, the herd mentality, thinking that's the safe place to go. But I always tell people, if you follow the group, you follow the herd, you're going to get average or mediocre results. And that's not what I signed up for. And I don't think you did either. If you enjoyed watching or learning from this video, please leave a like and subscribe to my channel for more content. If you have a question about any of my content or this specific video, just please leave a comment down below. And as always, stay focused on your freedom. I'll see you next time.